Hey, I want you to remember something specific right now. That feeling. You know the one I'm talking about. It's 2 p.m. on a Tuesday. You opened a trade 3 hours ago. Your stop loss was at 1.0485. Your exit plan was crystal clear. It said so in your trading journal. You'd spent the last 2 weeks planning this exact setup. But now, your position is down $340. The chart is screaming at you, it's bleeding, and your hands are shaking. Your first thought? This isn't supposed to happen. Not today, not to me. Your second thought? If I just hold a little longer, if I move my stop loss down just 20 pips, it'll come back, and boom, there it is. That's the moment we're going to dissect today. Because I promise you, this moment has cost more traders their account balance than any single bad trade ever could. Not the trade itself. The decision made in that moment of panic. I'm going to show you exactly what's happening in your brain when you stare at that red screen. Why your rules suddenly feel optional. Why the plan you wrote feels like it was written by someone else. And most importantly, how to never let that moment hijack your trading again. Because here's the truth nobody tells you. The biggest trading mistake isn't picking the wrong setup. It's abandoning the right one. Let's dive in. All right, so you're a beginner trader. You've done the work. You watched YouTube videos. You backtested a strategy. You even wrote it all down in a journal. Your entry rules, your risk management, your exit conditions, everything. You felt good about it too. Confident. Like you had a map. Then you take your first real trade with real money, and something shifts. The moment price starts moving against you, something happens inside your body. It's not logical, it's chemical. Your amygdala, that ancient part of your brain that kept our ancestors alive, suddenly takes the wheel. Your chest gets tight. Your palms sweat. Time feels weird. 3 minutes feels like 30. This is what I call the emotional hijack. And here's what's wild. In this moment, your prefrontal cortex, the part of your brain that planned this trade, that wrote those rules, goes offline. It's like someone dimmed the lights in the rational part of your thinking. You're now operating from pure survival instinct. Fear is the first hijacker, and it whispers something dangerous. You made a mistake opening this trade. If you don't act now, you're going to lose everything. So you do the opposite of your plan. You close the trade early. You panic sell at the exact moment you should be holding. And then, the chart does what your original plan predicted. It bounces, it recovers, it goes to your profit target. And now you're watching your would-be win turn into someone else's gain while you're locked in a new trade trying to make back what you just lost. Welcome to the second hijacker, greed. Because now you're not thinking clearly, you're thinking emotionally. You see that trade you just exited going up, and your brain says, I need to make that money back. Immediately, so you chase. You enter a trade that doesn't fit your rules, the setup isn't clean, your risk is too high, but you don't care. Because the only thing you can see is the $340 you need to recover to feel okay again. And statistically, that trade doesn't work out. It almost never does. And then there's the third hijacker, FOMO, fear of missing out. You see other traders posting their wins. You see a stock that everyone's talking about. You see an opportunity you can't miss. And suddenly, your written plan, the one sitting right there in your journal, feels too cautious, too boring, too safe. Maybe I'm being too conservative, you think. Maybe my rules are holding me back. So you bend them, just a little. Just this once. Here's what I need you to understand. These three things, fear, greed, and FOMO, they're not character flaws. They're not signs that you're weak or stupid or unsuited for trading. They're neurological hijackers. They happen to everyone. Even the best traders feel them. The difference between a beginner who quits and a professional who succeeds: the professional knows these hijackers are coming and they've built systems to protect themselves when it happens. They don't rely on willpower in the moment. They don't believe their emotions will be their friend when real money is on the line. They build their plans like a pilot builds a pre-flight checklist, to be followed, not debated. Now, I want to redefine something for you because this is going to change how you think about trading forever. Most beginner traders think a mistake is when they lose money on a trade. I took a loss. I made a mistake. I'm bad at trading, but that's wrong. A loss is not a mistake. A loss is an outcome. You can follow your plan perfectly, execute your rules precisely, and still lose money. That's not a mistake. That's the game. The market moves in unpredictable ways. Sometimes you're on the wrong side of it. So, what's actually a mistake? A mistake is when you abandon your plan in an emotionally charged moment. A mistake is when you let fear, greed, or FOMO override the rules you wrote when your head was clear. I call this the difference between being a stick trader and a flip trader. A stick trader is someone who sticks to their rules, even when it's painful, especially when it's painful. A stick trader says, I made a plan. I said I would exit if the chart breaks this level. The chart broke that level. My feelings don't matter. My plan matters. I'm exiting. And maybe that exit triggers and the price rebounds. But the stick trader doesn't care because they weren't faithful to the outcome. They were faithful to the process. They executed their system. They were a stick. A flip trader, on the other hand, makes a plan and then flips it whenever emotions spike. 1 minute they're a conservative trader with tight stops. The next minute they're a hold it till it works trader. They flip with each emotional wave. And flip traders, they have terrible long-term results because consistency beats perfection every single time. Listen to me. If you lose money while executing your plan, you didn't make a mistake. You took calculated risk. That's trading. But if you lose money because you abandoned your plan, that's a mistake. That's a preventable error. And it's usually way more expensive. Here's what a stick trader's journal looks like. Position went against me. Chart touched my stop. I exited at minus $47. I followed my rules. Moving on to the next setup. Here's what a flip trader's journal looks like. I was down $100, but I thought it would bounce back, so I held. Then it dropped another $200, so I panic sold. Then it came back up. I hate trading. I'm bad at this. Why am I doing this? One of those traders is building consistency. One is building chaos. And the crazy thing, some of the stick traders' trades are going to lose money. Some are going to hit their stop loss. Some will never reach their profit target. But because they're consistent about following their process, their long-term edge emerges. The law of averages works in their favor. The flip trader, even when they win small. And when they lose big. Because they're making decisions emotionally instead of mechanically. So right now, I want you to ask yourself, which trader are you? Because if you're a flip trader, no amount of YouTube videos, no new strategy, no better charting software is going to fix it. You already have a good plan. You just don't follow it. And if you're a stick trader, Congratulations. The work is different for you. Your work isn't finding the holy grail strategy. It's defending your plan against your own emotions every single day. Okay, let's break down exactly what happens inside a trading mistake. Step by step. Step 1. The setup. The moment before. You're calm. Your plan is written down. You've backtested this setup. You know your exact entry, your exact stop loss, your exact profit target, and your exact risk-reward ratio. You review your journal one more time. Everything checks out. You're confident, not arrogant, just confident. You know this might lose and you're okay with that loss. You enter the trade. Step 2. The initial move, the neutral moment. For the first few minutes, nothing much happens. Or maybe price moves slightly in your favor. You feel smart. You feel like you made the right call. This is the calm before the storm. Step 3. The reversal. The tension begins. Then it happens. Price turns. Not a little. It turns hard. Your position is down $80. Then $150. Then $280. And your body responds. Your nervous system detects threat. That ancient survival instinct kicks in. You start refreshing the chart every 3 seconds. You can't look away. Step 4, the justification, the thought spiral. Your brain is now writing stories to explain what's happening. The market is being irrational right now. Everyone knows this asset is undervalued. If I just wait, it has to come back. You're not thinking about your original plan anymore. You're inventing new reasons to hold. You're reframing the loss as temporary. You're telling yourself a narrative that lets you avoid the pain of admitting you were wrong. Step 5. The compromise. The rationalization. Now comes the critical moment. You look at your stop loss, the one you set when you were clear-headed, and you think, just this once. Just this one trade. I'll move my stop down 20 more pips. If it hits that, I'll get out for sure. You're not abandoning your plan. You're adjusting it to market conditions. You're being flexible. You're doing what professional traders do, but you're not. You're bending. You're compromising. You're letting emotion negotiate with discipline. Step 6. The hope. The temporary relief. Price bounces a little. You're only down $210 now instead of $280. See? Your brain says. I was right to hold. This is working. You feel a rush of relief, maybe even a little pride. You outsmarted the market. You had conviction while others panicked, except you didn't follow your plan. You just got lucky. Step 7. The acceleration, the point of no return. But then price keeps going down, down, down. Your new stop loss is only 15 pips away now, and your position is at minus $340. This is it. This is the moment everything breaks. You have a choice. Option A. You accept that you made an error in judgment. You didn't follow your plan. You're at your new stop loss. You exit. You take the $340 loss. You write in your journal, I didn't follow my plan. I won't make this mistake again. And you move on. Option B, you panic. You can't believe this is happening. You move your stop loss again. Just 10 more pips. Just one more chance. Most beginner traders choose option B. Step 8, the destruction, the compounding error, and then the market accelerates against you. Your position hits minus $600, then minus $850. Your entire original risk plan is now tripled. You finally exit devastated. Not because you took a loss, you were prepared for that, But because you let emotions take control, and now your loss is way bigger than it ever had to be. And here's the kicker. If you'd stuck to your original plan, that minus $47 loss would have been fine. You'd move to the next setup. No emotional residue. No revenge trading. Just the next trade. But instead, you're now sitting on a huge loss, and your brain is already planning how to make it back. So you take the next trade without proper analysis. You risk too much, and now you're in a death spiral. All because you didn't stick to your plan. I know what you're thinking. This sounds depressing. Why would I want to follow a plan that causes me pain? And here's the answer. Because the pain of discipline is always smaller than the pain of chaos. The pain of exiting at minus $47, that stings for 5 minutes. You accept it, you learn from it, and you move on. The pain of exiting at minus $340 because you couldn't follow your plan, that stings for days. That eats at you. That makes you question whether you're cut out for trading at all. One is a manageable loss, the other is a psychological wound. And here's something else. The traders who become consistently profitable aren't the ones with perfect records. They're the ones who minimize their losses through discipline and stick to their plans through thick and thin. Buffett didn't become a billionaire by timing the market perfectly. He did it by having a simple system and following it for 60 years, even when he wanted to deviate. You don't need a perfect strategy. You need a simple one that you'll actually follow. And the only way you'll follow it is if you've accepted the pain in advance. The moment your position goes red is not the time to decide if your plan is good. That's the moment to follow it. The evaluation happens after, in your journal, with a clear head. So here's what I want you to do, starting today. First, if you don't have a written trading plan, stop watching this video and go write one. Seriously, include your entry rules, your stop-loss rule, your profit target, and your risk-reward requirement. Make it simple enough that you could follow it in your sleep. Second, for the next 20 trades, whatever happens, commit to following that plan exactly as written. Even when it's painful. Even when you think you're missing out. Even when you want to move your stop just a little bit lower. Write down every time you're tempted to deviate and don't. Write down every time you do deviate. Be honest with yourself. Third, and this is important, find a community of traders who are trying to do the same thing, because this journey is lonely when you're alone. Trading isn't actually hard because the market is unpredictable. Trading is hard because you are predictable. Your emotions follow a pattern. Your weaknesses repeat. Your panic points are always the same. But when you accept this, when you stop fighting your own nature and instead build systems that protect you from yourself, that's when everything changes. If you're ready to master your mindset, build real discipline, and stop abandoning your plans every time the market gets scary, join us. We have a community focused on exactly this, helping traders move from chaos to consistency. The link is below. We'd love to have you. And hey, if this video resonated with you, if you've made these mistakes and you're tired of repeating them, drop a comment. Tell me your biggest trading mistake. Tell me how many times you've abandoned a good plan because of emotions. Because I promise you, you're not alone. Every trader who's ever made real money has been exactly where you are right now. The difference between the ones who quit and the ones who succeed? The successful ones just kept going. They followed their plans. So here's my question for you. Which trader are you going to be? I'll see you in the next one.